Good morning, traders. This is Dom for BreakingOptions.com. And this video is probably the most important video you will see. It's about sizing and risk reward. So what I did for members in our room is I built a sizing calculator because that seemed to be the biggest issue that involved both risk reward and how to properly size your trade. So this calculator is based off of a $1,000 account size that we allow $50 risk per trade. And our suggested trade size means you don't want to buy, even no matter what it says, you don't want it to be more than $150 worth of contracts on a $1,000 account. Why? In case it blows through your stops, that would be 15% of your account. So just because you have a stop with a risk of 50, still news could come out, who knows what, it'll blow through it. You do not want that to happen. Our return that we're looking for is $150. 3-to-1 risk reward is what we use. So 3 times 50 is 150. So how do our traders figure out, as I'm giving alerts, how much size to take based off their account? This calculator right here, like I said, is set up off of a $1,000 account. All my traders know how to change it, or I change it for them based off of their actual account size. But here is a simple example. They fill in the blue boxes. Okay, the buy price is $1. I say stops at 60 cents. That means you're risking 40 cents per contract. Okay, suggestion on the contract size is 1.25. Well, obviously you can't take a quarter of a contract. Most of our traders round up to 2 contracts. What's our target profit per contract? Well, if we're risking 40, 3 times 40, because we want 3-to-1, is $1.20 per contract. What's our target profit for the trade? 240, right? Because we're taking 2 contracts. So it's just 2 times how many contracts? $1.20. If we just held the options and basically played ride or die, let it get there, 220 per contract would be your sell price to hit your goal. But we do risk management of trades at breakingoptions.com. So our first sell would be, we would sell 1 contract at $2. That would be banking us a $1 profit. So now we have a new target. We've banked $1 profit. We've also taken risk off the table. At that time, we move our stops to entries. This is now locked in, a guaranteed 50% profit. You cannot lose on this trade. Our new target that we need to meet is $1.40 worth of profits to meet our full 3-to-1 risk reward. Okay, what does that mean? Just simple, so they know where they should be looking for a sell. $3.40 is the price the option needs to get to, and your target goal is met. Will we possibly sell there and roll the contract if the chart looks good? 100%. Now, guys, you have to follow rules, and I'm going to show you why here. If you simply follow your rules, okay, and here's section 1. If you only have a 30% win rate and only 1 trade actually hits your 3-to-1 risk reward, that's this trade right here. So you've lost 7 trades in your risk profile, okay? 1 trade hit actually 3-to-1. The others only hit 100, okay? You're break even, okay? That is a horrible win rate, but you're following your risk reward, you could see. And not only have we done that, we've only hit our real risk reward profile once, but we're following the risk, okay? Here's the same example, okay? All we're doing is getting a 50% win rate. Everything else is the same, okay? On a $1,000 account in 10 trades. We've upped the win rate because everyone should be about a 50% trader. Your account grows by 30% in 10 trades. Guys, this is pure math and discipline, okay? Look, we're losing our first 2 trades. We still only hit 1 on our risk reward profile, the total reward, okay? We don't know if a stock's always gonna hit it. We know it has the potential to. So we're using an example where it only hits 1. The other 2, okay, we got out for a little less. We didn't meet it, we only got a 2-to-1. Your account still grew by 30%, guys, following these rules and this discipline. Now, here's a 50% win rate, okay, with hitting our full risk reward, which we have done. Guess what, guys? In 10 trades, your account grows by 50%. Guys, this is very doable. This is all discipline. You have to have a risk reward profile. You have to follow it. You have to have a sizing profile. If you do not do this, it's basically gambling. Okay, this is pure mathematics. So I suggest everyone do this, set up their own profile, get a calculator, make it nice and simple for you. All my traders have this. They have it right at their disposal. They have their own copy, so they can simply enter it and take it from there. And it tells them So they're on the fly. They need to know what to sell their options at. Abe figures it out and they copy it. They make sheet 3 where it's their full trading book, or they update it daily and I look at it. So guys, I hope you enjoyed this video. I hope this helps you. And if you're looking for a mentorship program or any kind of trading room, please join us at breakingoptions.com. We do have a special right now, free classes for life with any silver or gold membership. And yes, you get this calculator, you get this risk reward. And this is just kind of open up your eyes, guys, that maybe if you just look at the sizing and the risk you're taking per trade, or maybe if you tweak it a little bit, you could make 70% wrong trades and still break even. You could be 15%, 50% right, and actually grow your account by 30% in 10 trades. Okay. And at breakingoptions.com, we only take 2 to 3 trades a day, and we hate Lotto Fridays. Hope you enjoyed this video. Any questions? Email me, tepdon@breakingoptions.com or support@breakingoptions.com. All of those emails and all of our specials are listed in the description below. Thank you.